you've gotten props from President Trump last week and then again this week for cutting 7 times at a time where he would like to see the Federal Reserve cut interest rates. What was your reaction to that post?
You know, monetary policy decisions are driven by the economic circumstances that we face. And I think that all central bankers around the world are loyal to their mandate and observing the facts and analyzing the data as well as they can. This is what we've done in Europe. We have inflation coming down seriously. As I said, last reading 2.2%. Our projection for 25 is likely to be 2.1%. Inflation expectations are very anchored around the 2%. Including in the medium term, and we have growth which is projected to be 0.98%, depending on whose projections you're looking at. The US is a different situation, and the impact of tariffs will be different on the two economies.
What is your expectation there? Higher inflation in Europe? In the US?
I think the IMF came out with some projections this morning, and they did increase the inflation projection for the United States.
And
but it's inevitable if you raise tariffs on goods coming in, this is increasing prices, added to which it creates uncertainty. So the combination of the two is bound to wake up a little bit.
I know you're close with Chair Powell. I mean, I know you communicate pretty often. Have you talked to him about some of this new political pressure?
We're both used to political pressure in one way or the other. But as I said, I have immense respect for the work that he does and for his loyalty to his job and to being as diligent, disciplined as possible to deliver on his mandate. For him, I think, I'm sure, as it's for me, the mandate is our compass. We have to deliver on our mandate.
If there is an attempt by the executive branch in this country to fire Chair Powell before the end of his term, do you see that as a material risk to markets?
I very much hope not.
Hope that doesn't happen.
Hope that it is not a risk.
What would it mean for the markets?
Look, I'm not going to comment on, market reaction to hypotheticals that I hope are just not on the table.
Understood. But speaking of some of the reaction here, I'm wondering how you're feeling about the European banking system, if there's been any spillover, considering some of the financial stress we've seen as a result of these announcements.
We haven't seen spillovers. And what I can say is that under the regulations that we have, which is Basel III, with reference to a Swiss town in which we meet on a regular basis, but which has brought all the regulators and sometimes the supervisors as well together to make sure that we don't have a cataclysmic disaster like we did in 2008. I was there. I don't want to see that again. So our banking system is, I think, solid. The banks are far more better capitalized than they were before. And I think the probably more scrutiny applied to supervision than was the case at the time has served us well. And we should really abide by those principles. Not always pleasant, not always, stress testing and scrutiny is always resented because you want to run your business. But to the extent that it is conducive and critical for financial stability, we need to do that.
I think you mentioned increased trade with China in one of your answers as a potential impact on Eurozone economy. I'm curious what your expectations are there. I mean, a potential trade deal with China, is that something you could envision?
That is something that the European authorities in trade, that is the Commission, will have to decide and will have to conduct. But it's an economic natural consequences or second round effect, if you will, of very strict and very high tariffs imposed by the lead partner of China. China will face a moment where it has overcapacity and it has to ask itself, what do I do with that overcapacity? Where do I sell my goods?
And you think Europe is a destination?
It's one option for them, for sure, but it's not for me to speculate what they're going to do with that. And I hope that a trade deal will be something that can be considered by both partners, the United States and China.
I mean, there's an effective trade embargo between them now, 145% tariffs, 125% tariffs the other way. How disruptive is that for Europe and for the rest of the globe? Just those
I think
two?
It's too soon to say. It's too soon to say. But they're hopefully, as I said, there will be a trade deal between these two economic giants, and that will be, acceptable or not too unacceptable for both partners as deals are. But as far as we're concerned, we're going to focus on our business and make sure that our economy is competitive, that our regulatory environment is rock solid but simplified, that we have a stronger and wider capital market union, and that we address all our vulnerabilities as they have arose as a result of the shock.